Now, the Treasury Bills market traded calmly as investors remain on the sidelines after Wednesday's Treasury Bills auction. Traders at Axis Bank say they expect same sentiments amid cautious trading by investors. Dimeji Obasa, fixed income dealer at Axis Bank, joins me for a discussion on the fixed income and FX markets. Dimeji, thank you for taking the time out to join us today. We've seen, of course, a week of we had that auction, but talk to us about this sentiment that we're seeing at the market and talk us through the yield curve.
Good day. Thank you for having me. Yes, like you noted, the market has been quiet all through the week, owing largely to the significant reduction in market liquidity. Market liquidity is currently at a negative of about 197 billion. That, in addition to the bearish sentiments that investors have caused the market to be really quiet, with most investors and market participants staying on the sidelines over the course of the week. However, we've seen some activity on the long end of the curve, particularly the 2042 paper, trading around the 13.7% handle. Not much happening on the shorter end, with the Treasury bill auction being, not having a lot of market participants winning at the auction. Rates on the long end with the Treasury bills 365 days stayed constant from the previous auction. This was in contrast to the general consensus that the market had, and market sort of just reeling from that shock, and we still expect rates to go higher as market participants expect a higher rate and will continue to throw in higher bids at subsequent auctions.
But do you, as a trader, do you see these higher rates coming? And when we're talking about higher rates, how high can these rates go, given what you've seen so far?
Well, it is very clear that the supply side in the market, being the DMO and the CBN, have the upper hand. They're able to use certain tools to sort of move the markets in certain directions. However, market participants still expect higher rates, and which is what our expectation is as well. Bids are consistently getting higher in the market. In terms of the target for where rates would go, our expectation is that at the minimum on the NTB, we should see at least a 200 basis points increase on the 364-day paper at the next auction, as the secondary market levels, even though we'll still trade around where the 7% closed. However, going into the next auction, we expect at least a 200 basis point increase.
What are investors thinking in terms of the outlook for inflation for Nigeria, at least going forward? And of course, vis-a-vis where rates are now, yes, there's going to be that gradual climb, but obviously it's still a long way, that gap between where market rates are and, of course, inflation, still a negative return for investors. But what are they thinking in terms of, how far inflation can go if there's going to be an easing, U.S. Fed rates and all that's happening?
Well, inflation has been on the rise globally, and Nigeria would not be any different. In our estimation, we still see inflation increasing month on month, at least till the end of the year. This is in addition to what is happening globally, local supply chains being the cost in local supply chains increasing, as well as going into the festive season for the ember months. We expect that inflation will still be higher, and we don't see any reduction anytime soon. However, in terms of increase or putting a ceiling to it, at this point, we will not put any ceiling to it. We expect at least, say, a 50 basis point increase down to the end of the year. All right, so we would still continue to have that negative yield environment.
All right, Dimeji, we'll leave it there. Thank you for talking to us today. Appreciate your time on the show. Dimeji Obasa, fixed income dealer at Axis Bank.